First off, in order to better follow along with this video, I'd like to suggest that you watch this video in full screen mode, as the text of the letter is relatively small, and full screen mode makes the letter easier to read. The first payment letter is provided by your lender when you close your mortgage. The letter notes your monthly mortgage payment amount, when the payment is due, and where to send the payment. The letter is relatively brief, only one page, but it is an important document, so we are going to review it item by item. The top of the letter outlines your loan number and the property that the mortgage is on. It's important to know your loan number in case you ever have any questions about your mortgage. The first paragraph contains a lot of legal language related to private mortgage insurance, or PMI. PMI is insurance against loss from mortgage default provided to the lender by a private insurance company. PMI typically requires that the borrower pay an ongoing annual fee paid monthly. In short, this first paragraph says that the lender may pay for PMI on behalf of the borrower and that the borrower is required to repay the lender for any PMI payments. If the borrower does not repay the lender for the PMI payments, the loan will go into default and the borrower could lose the property. As a borrower, you should know at the very beginning of the mortgage process if you're required to pay PMI and if this paragraph applies to you. So there should be no surprises when you receive the first payment letter. The second paragraph addresses any homeowners association fees, also known as HOA fees, co-op, or maintenance fees, charged by most condominium complexes or buildings and some housing developments for the maintenance and upkeep of the complex, building, or development. Basically, the second paragraph states that the borrower is required to pay these fees, if applicable, directly to the homeowners association or building, and that the lender is not responsible for the collection or payment of these fees. The final paragraph states the date when your first monthly mortgage payment is due. A couple notes on this point. First, your first monthly mortgage payment is almost always due on the first of the month. Second, because you pay mortgage interest in arrears or on a trailing basis, your first mortgage payment is typically the first day of the second month after your mortgage closes. So if your mortgage closes on May 20th, your first mortgage payment will be on July 1st, which is what we show here. This does not mean you're getting a free month for your mortgage. You pay the interest required for the month in which your mortgage closes, so May in this example, as part of your closing costs, and then your first payment on July 1st actually covers your interest for the month of June. It's kind of complicated, but there's no free pass or month when it comes to paying interest on your mortgage. The table below the paragraph shows the estimated monthly payment due. The first line, principal and interest, is your mortgage payment, so $1,500 in this example. The next three items are homeowners insurance, mortgage insurance, and property taxes. Depending on your lender and mortgage program, you may be required to pay for these items at the same time that you make your monthly mortgage payment. While the lender keeps the money for the mortgage payment, the money for these items goes into a special account called an escrow or impound account, which is controlled by the lender, from which your taxes and other expenses are paid when due. Lenders typically require an escrow or impound account in cases where the loan-to-value ratio, or the ratio of your mortgage amount to the value of your property, is greater than 90%. Government-sponsored mortgage programs such as FHA and VA loans also require an escrow or impound account. In this case, our borrower is not required to pay these costs into an impound account, so we have left these items blank, and our total monthly payment at the bottom of the table equals our mortgage payment. Below the table is a brief paragraph that explains that the borrower will receive a monthly statement or payment coupon, an envelope that they can use to pay the lender. It's important to review the first payment letter carefully to make sure that the terms of your monthly payment have not changed since your mortgage closed. Additionally, it's important to make your mortgage payments on time to avoid any late fees. We encourage you to review related freeandclear.com videos such as our HUD-1, Truth in Lending Statement, Good Faith Estimate, and Lender Fees Worksheet overviews, as well as our Home Purchase Mortgage Guide on freeandclear.com. Thank you for reviewing the first payment letter overview with freeandclear.com. freeandclear.com.